All right, well, stocks flat after trimming earlier losses, but investors totally remain skeptical ahead of the EU summit based on what Ashley just said. Our next guest says global economic growth is in jeopardy, well, thanks to Europe. Joining us now is Yu-Dee Chang, Chief Investment Officer for ACE Investment Strategies. Yu-Dee, you say that our markets are totally captive to the news coming out of Europe, aren't they?
No doubt about it. Right now, everything is headline news related. If you look at it, U.S. fundamentals are actually improving. However, the attention is still pretty much on Europe right now. No doubt about it on the short-term basis.
But that being said, you also say that since volatility is the new norm, actually use the VIX, the volatility index, to make investment decisions. I don't know a lot of people that made money doing that in the past.
No, I don't know. If you look at it, volatility actually trades in ranges. So I don't think there's an absolute high or low. Like recently, it's been pretty accurate. When the volatility goes to the downside, meaning that when everybody gets to be a little bit more complacent, it actually signals that's a market top. Right now, using the VIX is somewhere around 24, 25 or so. On the other hand, when the volatility goes to a higher hand of it, when the market's already dropped, when people's already in fear, usually when the volatility picks up around 40, 45 or so, it has been proven overall market it's been a buy. So recently, over the short-term basis, VIX has been a pretty good indicator of telling you where market tops and bottoms are.
The volatility index is basically tells you what the S&P 500 options are going to do 30 days out. So it's a guess of what's going to happen in the future. And you're right. August, September, we did see highs in 40s like that. We're hanging around 29 now. So you're saying when you see it come to about 24 is when you start selling.
Yeah, absolutely. Usually that means the market has going to an extended rally and price action has slowed down a little bit, getting to be a little more steady. Means all the people who wants to buy has already bought into the market. That's when volatility has already come down, and that's when, like you were saying, is where people need to be careful and maybe selling into the rallies.
Okay, but you brought us a few picks today that I thought were interesting. Well, the Spider Consumer Staples, the ticker's XLP, that's been, I guess, as sure, slow and steady. No matter what happens, we're going to need toothpaste and diapers, right?
Yeah, I think right now, to me, everything is in the tale of two cities. On one hand, you will have to reinvest to pursue for some yield. On the other hand, it's so headline news related. Any given day, it could come in, the market could be down because of something happened out of Europe. Thus, our strategy has been, maybe to separate out your stock buying, equity buying into two different categories. One is using a little bit more defensive stuff, such as the consumer staples, maybe the Procter & Gamble's, the Coca-Cola's, McDonald's, to be your core investing. Right. However, do use some more of the high beta, more of the volatile stocks, maybe stocks such as RIM, stocks such as ISRG, as more of your trading stocks to take advantage of the oscillation.
Is that where you put Bank of America? Because I know Bank of America is on your list. Is that your high beta risk, don't bet the farm stock?
Absolutely. Believe it or not, to me, the financials, people are talking about, is it time to really invest in the financials? Some people are saying, no, stay away. To me, financials has become a very good trading vehicle. You look at Bank of America, it has a beta of about 2.86.
I know,
which means that,
Bank of America's got so much going on around it. You got Countrywide. Are they going to throw that into bankruptcy? Of course, you still have Merrill there, but there's a lot of confusion as to what Bank of America is.
Absolutely. I totally agree with you. That's why we're saying it's not something that to be invested in. However, look at it. Just from the bottom of $5, before you could blink, it goes up 70 cents, which is about 12, 13%. So it has become a very good trading vehicle to be bought on dips and sold on rallies. That's why we're saying these type of stocks, it's not to be held forever and considered as a long-term investing. Yet, in the same time, don't say, I'm just going to stay away from it if it could offer you every now and then some trading opportunities.
Fair enough, though the stock is down 57% year to date. Yu-Dee Chang, thanks so much for being with us.
Thank you.